All right, December 7th, 2011. It's almost 3 o'clock p.m. So coming into the U.S. close, a couple of things I want to go over. So let's start off with the daily real quick. And the daily looks a little bit interesting because we have this, big downtrend which is still intact. Um, and some people might argue that this downtrend is broken, simply because, if you take this point and draw it through here, you can see that we broke the near-term trend line. Um, so that's where the confusion sort of comes in because you have one side of it where you might argue, okay, well, this trend line's broken, price broke through, surpassed the high of this long wick, um, has pulled back since, and one thing you'll notice is that the magnitude of these candles is not equivalent to the up momentum here. So what I'm trying to say is that the downward pressure is not as significant as the upward pressure that caused the break in this trend. Um, However, if you look at the bigger picture here, you can see that the upward pressure here is still um, relatively tiny compared to the momentum we've seen to the downside. So um, anyways, looking at it from a lower time frame, we start to see a different picture because again here, although we did have this huge spike here. What I'm focusing on is this price action through here, and it's become pretty clear that the down moves are significantly more violent and more powerful than the up legs. So just looking at that, it leads me to believe that if we do have a breach of this trend line through here, the result would be another leg to the downside. So you can see that we have pretty good pressure to the downside, consolidation and break, a huge move down, right? Same thing over here, consolidation and break, a huge move down. I would imagine if we see any sort of a break of this trend line here, the move would be at least till this swing point, if not down here. So what we can do is we can also draw in this trend line going from this point to this point, and that could be an expected target of a breach of this trend line through here. So that's something that I'm more leaning towards at this point, but in the near term, the market doesn't seem to be thinking the same thing. So what we see here on the last leg is a big push down, a consolidation or a pullback, and we have this inverted hammer forming, um, which is still inside the range of this bar. So this is an indication to me that there's still a good amount of selling pressure, and that this might be the swing high for the down leg that I've been looking for here. Now the only issue is if you look at the hourly, there's a good amount of momentum creating that bar, and the pullback has been very small. You can see currently we're actually pushing up and trying to take out that swing point. So that's even more evident on lower time frames. You can see that um, this same pattern repeats itself over and over again. In this case, we have this trend line through here. We have a breach of the trend line, a pullback, and so what? I mean, overall, there are lower swing lows and lower swing highs, and that's what I'm making out of here. So more specifically on this particular trade, I drew in this rising trend line through here. We had a break. Price retested the level, and you can see we had a follow through on increased momentum, and I took an entry on the break of this swing point with a stop above this high because this is the high of the 4-hour candle, which we now know is a inverted hammer. All right. So, I'm short from this point. As you can see, price has just shot straight up. So coming into end of day, if we do see consolidation and a breakdown, that would be encouraging. But in the near term, it does look like price wants to break higher. All right. Looking at a 1 minute chart, finally, you can see that it's pretty obvious that there are some sellers up here, but the selling pressure has not um, even come close to buying pressure through here yet. That could change. If in fact um, sellers are just digesting the buy order at this point and looking to roll price over. But I do think that the biggest tell was the break right here. We had, if we drop in a Fibonacci retracement from highs to lows, we had a 50% retracement in here. We also had a falling trend line, and we had a supply zone. And as you can see, whoever came in and bought this thing through here really managed to take out a significant number of the short positions. And so, the guys who got short through here on the breakdown, whatever it was, put them underwater, so including myself, right? So now what happens is, myself and probably many other traders are holding on, looking at this point as a last resort. And if this breaks to the upside, then we'll be forced to puke our positions. Now, there might be some people who still hold on to their positions, but what happens is, if you're managing your money correctly, the risk to reward at that point becomes pretty much out of whack, right? So if right now I'm risking about 30 pips, in the larger picture, I'd like to make 150 on this gap fill right here. So this trade in itself is about a 5-to-1 risk to reward ratio. If I let this run, my risk to reward ratio, becomes a problem in the sense that over the long run, if our risk to reward ratio is not in check, then we will most likely lose money. So that's the reason I think a lot of people will be forced to exit the positions on a break of that level. I guess one more thing I want to point out is if price does manage to do that, a lot of times what you see is on a failed reversal, the momentum can be quite large. As there's a lot of people who bank on these essentially as indicators of price action, and when those fail, they exit. So here's an example. You had a pretty much the same pattern form right here. We had an initial push down, but as price breached it on the upside, you can see that the magnitude of the buying pressure that came into the market. If I can find another example on the fly here, we can go through it real quick, but it seems like that's the only one that I see at the moment. Let me see a good one right here. You can see we had a little reversal form here. Price broke down very briefly, and as we broke through here, there was a good sized push through about 50 pips into the next level of supply. So that's pretty much what you can expect when this is broken. And now if we do see the break to the upside, I'll talk about that a little bit. What I'm expecting is on a daily chart, the most likely occurrence would be a continuation of this upside momentum, most likely until 136. At that point, I'd like to be a seller again. But that would essentially just be a breakout, pullback, continuation sort of thing. So we'll see what happens. But you can see even in the near term here, buyers are sort of taking the faceplant as the selling pressure, and this is a minute chart, in the last 2 minutes has outpaced the buying that has been going on for the last hour or so. So still up in the air at this point, but I think this might be a game changer. I'm not sure what's causing it. Maybe some comments by some government official, but it's kind of cool to see how fast things can change. You know, this upside momentum was unexpected, and this downside momentum at the end of the day, at 3 o'clock now, is also very unexpected, to say the least. So, looking at the price pattern here, we have this similar pattern that we have on the 4-hour, which is the reversal. The 4-hour is a 4-hour chart. We have this push down, leg up, and sort of seems like a false move. On the hourly, we have this leg down, push up, which sort of seems like a false move. So if sellers continue this, we should be seeing these lows very soon, and a break of that would be levels that we talked about, perhaps gap fill. So anyways, I'm going to end this video, and it'll be interesting to see what pans out very shortly. Thanks for watching.